Hi everyone, Jeff Yastine here. I just wanted to comment briefly about the news that Amazon will not be building its second headquarters, the so-called HQ2 project in the New York City area. That news came out here on late Thursday. Back in November, I told Banyan Hill readers that it was quite possible that this project, HQ2, would never get built. Now, I also warned in that article and in a series of articles over the past few years that Amazon investors need to take heed of the company's growing size, because when companies get too big, history shows that when they exhibit really too much dominance in an area of the American economy or economies elsewhere, it's only a matter of time before government regulators begin to look at a company for evidence of monopolistic or antitrust behavior. And here's what's so interesting about Amazon abandoning HQ2. In the last 6 months, there's been a growing number of antitrust investigations against the company launched in Europe. The EU's antitrust authority, as well as regulators in Germany, Austria, and the United Kingdom, have all opened investigations along these lines into Amazon's business practices. In fact, Austria's announcement came out yesterday, on Thursday, which was the same day that, of course, Amazon announced it would pull out of the HQ2 project. I believe that Amazon does not want to fight what we would call a two-front war, with European Union regulators on one side looking into its operations, as well as New York City activists on the other, also looking at the company in a sort of hostile environment. Now, for the last 20 years, technology has been really one of the most unregulated parts of American life and the American economy. And eventually, companies and industries, when they're successful, they just become so big and dominant that they come under the microscope. It's just an inescapable fact of American business life, and it's shown throughout history. It happened to Microsoft in the 1990s, the late 1990s, when it was really the most dominant tech company out there. In prior eras, we saw it happen with AT&T, with IBM, with Xerox, which at one time owned most of the key patents for the copy machines that most of us use today. It also happened in the 1950s when the government moved against a number of movie studios in Hollywood. And the reason why was because they owned not just the studios where they produced the movies, but they also, at the time, owned a lot of the big theater chains where these same movies were shown. Again, that was considered as antitrust behavior. And of course, the granddaddy of them all was Standard Oil, which eventually was moved against by the US government in the early part of the 20th century and was forced to break itself up into smaller pieces as well. The final note I want to make here is that if you are an investor in big tech stocks like Facebook, like Google, and of course Amazon, and perhaps others, you have to consider whether those companies may be too large and too tempting of a target for this growing array of calls for regulation and antitrust investigations. And if we are to see more of those, again, not just Amazon, but with more of the big tech companies, it's possible that we will see more of those stocks selling off as investors price in the likelihood of these antitrust investigations coming to a conclusion and perhaps forcing some of these companies to sell or spin off parts of their operations. Something to consider as we go forward here. If you like what I'm talking about, remember to click the screen. I'm Jeff Yastine.